Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 17th. Michael Boutros here with you on the line. Carlos, Eman, Mark, Peter, Pete, Pooja, Tom's in the house. Great to see everyone here this morning. The exhaustion trade looks like it's starting to pan out. We were warning about this last night. Dollar yen, nice little spot where it could see that near-term rebound. That has materialized. I wouldn't go chasing it. Like Jamie said in his piece yesterday, I wouldn't really necessarily get heavy on fading. There are some opportunities. I have been playing on the Aussie a little bit, even on the Euro that came off of a nice level right back into the weekly opening range. Lots of stuff to talk about. So on the menu for today, we'll quickly touch on the DXY, dollar yen, Kiwi from last night, crude coming off of a huge level, massive level from a weekly standpoint, from a daily standpoint, near-term momentum profile also starting to turn over there. So you don't know if the pullback will materialize into a more significant correction, but as it stands right now, I still think the risk is for that pullback to get a little deeper there. So we'll hit those three first. From the previous update, euro dollar, Aussie dollar, pound dollar, euro's kind of still, like I said, in that range, just below resistance, although a nice pullback. Aussie also looking for that possible exhaustion trade. We talked about the Kiwi trade last night. We'll do that first. Pound dollar, same thing, just a range below some pretty critical resistance levels. And then the pound crosses have kind of fallen out of view. I know we started last week, all week, and even into the start of this week, really focusing on pound CAD, pound Aussie, pound yen. The dollar has started to move, or we're starting to see some reaction. So the focus is starting to shift away a little bit from those, but we will go back and take a look if necessary. Okay, so that's what's on my list. Anything that you guys want to cover, specific questions or trade setups, feel free at any time to throw them on the message board. And let's jump right in. As far as event risk for today, guys, we do have the Bank of Canada rate decision on tap. It's going to be at 10 o'clock. So keep your eye on the loonie. Haven't really been tracking that one. It's been sitting just above support, so we'll take a look at that today. But later in the session at 2 p.m., you get the U.S. Federal Reserve Beige Book. So that's basically the updated assessment of the Fed's 12 districts. Not really major, we're not expecting anything major to actually coming out of this one. So just be mindful that will be released at 2 p.m. Eastern. I would be willing to take another brief second at this session to talk about Bitcoin as well. Seeing that thing continue to tumble, I do think there's more downside to go. Day of reckoning yesterday and sort of the last couple of days. But a break of a very basic technical formation still leaves the risk lower for Bitcoin near term. So at least from price action, that's what that's saying. Tom wants to take a look at Euro Yen. Let's add that to the list. Is Pooja in the house? I think I saw her early. Yep, she's someone who's been tracking Euro Yen as well. Weekly charts, I even put this out on Daily FX yesterday. Weekly charts really have us coming off a big region in Euro Yen. So Tom, I'll definitely take a look at that. I can't necessarily advocate jumping into a short here right off the bat, but the initial reaction, let me say this, the initial reaction that we saw at price at key level in price and time, it leaves the vulnerability or the risk, as it were, still weighted to the downside there too. So Tom, I'll take a look for you on Euro Yen. Hello, Michael. Can we cover dollar Swiss, please? Eman, sure. You know me, I'm not a really big Swiss trader, but I'll take a look for you. No problem. By the way, I got your email about a special request on breakout strategies. Let me know specifically what you want to review on that, Eman. I don't know if that's necessarily a topic for a whole foundations webinar, but you have SB, so this is the better forum. So if we have time, I'll get into that. But for sure, I will bring that up at the next foundations webinar either way, okay? Tom says, great, thanks. Yeah, more than welcome, Tom. Okay, let's jump right in. So here's the DXY early in the week. This kind of, this update at this point, I guess I should give you guys an update later tonight on this one. DXY has basically just broken down. Here's the weekly charts showed. Basically we're rebounding off this 91.93 level. That the ideal scenario is to get a pushback into the median line to fade this thing for a break of 91.33, eventually looking for a drop deeper down into 89.62 and change. Long story short, it broke and we're basically sitting at the lows. The daily chart showed this. 91 is the last level there. That was the lows. We've broken that low, and now we're sort of coming right back into it as resistance. So this update obviously is from the 9th. Here's what we look like now in dollar yen, in the dollar index. Okay. On the DXY specifically, the weekly charts can be very telling in what we've been looking at. So let me bring that up first. And slope is dope. What can I say? This is the 38.2, which has reflected really well on the upper side. Downside break saw a little bit of a drill lower. If you add the 50, I just wanted to bring this up. Converges right a little bit lower down there at 2009 high, and that's that 89.62 barrier. So look, the analog does look lower for the index basically into the close of this week based on the analog that we've been following. So I don't want to get too excited, but certainly that kind of performance off of the median line does bode well, you know, for a little bit of a near-term lift here. On its face value, we've simply set a weekly opening range, and we're sitting right slap in the middle of that range. So try to keep things as objective as possible. We're at downtrend resistance support rather. So the broader picture still looks lower. You're at a near-term downside support slope. I think it was paramount more so in dollar yen, which is what I highlighted yesterday as sort of the area. I know we're still holding shorts on the swing side of trades. That doesn't change, but certainly on a counter trend type of near-term scalp, there was opportunity, I think, for a little bit of a rebound play there that we played last night. So dollar index, okay? This week's close will be paramount. A break lower from here, 89.62. That's the 2009 swing highs. Okay, going back to here. And like I said, that converges on slope. It's the 50 line for this broader formation we've been following. So that's the bigger picture from 1,000 yards up on the dollar index. Again, the daily chart, immediate resistance is right back at the 2017 lows. That's 91.09. You got slope that converges right there on that same region right now. That's going to be the focus today. And this is also the weekly opening range now. You have the weekly opening range lows at slope support, weekly opening range highs just below former major key lows. So you're basically looking for a range break of 90.30 into 91 for guidance. Break higher, I would think you get a little bit more of a recovery. Okay, now why today? Again, you know, I stress these daily closes. Why so important? Because specifically, if we're able to push a little bit higher in the index, if we do push through the weekly opening range highs and momentum recovers back above 30, that would be a tell. That would be near term, you know, near term constructive on price. Now, 240-minute chart on the intraday looks like this. Here's the weekly opening range. Here's your weekly open right here at 90.95, just below that 91 handle, putting added emphasis, added technical significance on a clearing of 91 to the upside. So, you know, you got the divergence that was occurring into the lows, kind of seeing a nice, decent weekly opening range. Again, you know, calling the low is never going to be, you know, it's always going to be a fool's errand, but recognizing when market price is vulnerable. And that's what we're doing right now. Vulnerable for a near-term rebound if we do clear 91. Okay, till then, play inside this range. Everything you should be touching, in my humble opinion, again, the swing side things put aside, should be really quick on the near term, guys. Quarter of daily ATR, just shave it off. If you want to leave a quarter of the trade on, I'm always a fan of leaving a little bit on just to see if you can pull through the trend that you're looking for. But nimble is the name of the game. You know, everything's been just jackknifing, down and up, down and up. You get a 60 pip rally, you start to feel good, or a 60 pip decline, you start to feel good. And that's basically all she wrote. She starts to come right back. So stay nimble still until we clear some of these ranges, okay? Any questions on the DXY before we move off? Okay. The analog calls for continued dollar weakness into the close of this week, so basically Friday. But price speaks and technicals are everything, and if we break through 91, that's the objective reversal you're looking for. So next up on tap, it's a quick review of the DXY dollar yen from last night. Here's the reason things to me on dollar yen looked so precarious. I still like the swing trade that we're in. I don't want to interfere with that, but the near-term picture was being highlighted on so many different fronts. So dollar yen from last night, here's what we were looking at. First, the weekly chart. So the 618 objective retracement of the advance off last year's low came in at 110.15. Momentum on the weekly charts, a basic support in momentum is right there as well. So we've been sort of contracting as far as volatility is concerned, just from a sheer swing or momentum standpoint, rather. Momentum profile looks like, basically a near-term breakout is imminent as we get into the apex of this consolidation structure. So price is coming into support, momentum coming into near-term slope support. All right, there's a risk, right? Nothing big. I wouldn't start trading the reversal. Daily chart showed another couple of very interesting measured moves right here. Here's the daily chart, looks like a little clearer on the live charts. That level was defined by not only that 618 retracement, which is the bottom of that range at 110.15, but 110.23 was the measured move of this consolidation break. You could see it a little bit better on the 240. Okay, so if we were to take this just as a near-term consolidation, wedge, triangle formation, whatever name you want to call it, the objective technical analysis 101 measured move, okay, gives you 110.23. So take the widest part of the consolidation, measured from the origin of the break, 110.23. So 110.15 to 110.23 is what we noted last night as, okay, look, that's a region which could pose a problem to the near-term downtrend and the short that we're in near term. Add to that, okay, dollar yen is coming off a 7-day decline. Okay, the last 3 out of the 3 times that we saw. Now, I didn't go back further than that. We could go back further and further and give you some real technical sort of metrics on that. But the last 3 out of 3, just like to look the last couple times we saw it, did see a near-term recovery in price before resumption. That's to say that it's not necessarily a 7-day decline is what you see at the extremes of the trend, but within the confines of the trend could give you that near-term recovery. What does that mean for us? Near-term guys, if you missed out on the swing entry, gives you an opportunity, A, to play a little bit of a fade move on the rebound, B, to let that rebound offer some more favorable entry positions to get back on the short. And I think that's the mindset that I'm in right now. So, heading into 110.23 last night, 110.15, it's funny because I was actually just chatting with Jamie when this was happening. The focus was on what was going to happen right there. If we continued lower, if you're holding the shorts, you have nothing to do here, guys. If you're holding the shorts from the initial entry on the swing trade of things above 111.80, you're good. But if you're a near-term guy and you missed that entry and you're still looking for something to do here, the momentum profile failed to make any fresh lows as price continued to make lows. So you're seeing that divergence signal is kind of show you, again, a little bit of a tell of near-term exhaustion. Secondly, we're coming into a pretty big level, right? We just talked about that measured move, the consolidation break. So inherently, that's your target. 618 retracement of a longer-term multi-month range. That's important. Add to that basic slope resistance or basic slope support. Okay, this is a parallel of the highs. If I take these highs that we were working with on consolidation, just extend it to the lows, look where that converges, right there. So you had a lot of things to look at on top of the fact momentum was giving us the change or the divergent signal. And these are the trades, guys, that when we're trading counter trend, these are the ones that'll draw my attention. I'm never going to be a guy who's saying, hey, look, there's a Fibonacci confluence here. Just go short blind at one, or go long blind at 110.13. It doesn't work that way, right? You need to see that there is more evidence to support your thesis. The more evidence that there is, we have a measured move target, we have a key critical 618 consideration, we have slope, we have divergence. That gives me 4 pieces of the puzzle. For me, that was enough to at least prompt some sort of small position. So the rebound, testing, swing highs from the previous session, so that's inherently going to be a little bit of a kickback. To get this thing like on a position where you'd start to worry for the swing trade is if we start to clear the weekly open. Okay, the weekly open comes in right here, basically. Let me give you the exact number at 111.08, just above 111.08. Okay, 111.05 is the gap open that we made back here. We eventually filled that, but a level I'm still looking at is a decent pivot in price as is. So that would, for me, 111.08, 111.05, if we clear that, that would be an objective range or an objective break of the weekly opening range, and certainly would shift a near-term bias looking for a late week high in dollar yen. I don't know if we'll get that. The game plan for now is to play inside the weekly opening range. So longs that we took last night on this, take a little bit of write off at that last swing high, so I didn't get out yet. But if we start to break down deeper, go break even, do not press it. We're trading counter trend. Swing guys who were in it from the 1180 entry, you're good. Keep that swing where the stop is set by Jamie. We'll work with that as is. But near term, that was the justification for the call for some sort of rebound here in dollar yen. Any questions? Now, on its face value, one other thing that I would like to point out to you guys is if we do inevitably clear a 111.08, 111.05, specifically on a close basis today, or not even on a closed basis, but even on a stretch basis, that would constitute an outside day reversal off the lows or off support. And again, near term, real near term, that would suggest to get a little bit more of a bounce. And I can bring it up and show it to you guys. Don't take our word for anything. Make sure that what we're seeing, you're seeing also objectively in price. I'll just bring up the indicator tool for the last consecutive bars. And if you take a look at this, the last, this is always offset by 1, by the way, so it's always a lag. So we did, in fact, close 7 days. This shows 6. But the last 7-day decline that you look, just scroll back in price. Here was the last one. Look at the price. We literally made a low. We rebounded for 3 days before we resumed lower. So that's the last instance. What about previous to that? On the back of a 7-day decline, look to the left. Well, it was right here. Okay, it was right here. What happened then? Same thing. You saw 1, 2, well, basically about 3 days again, right to the upside before resumption lower. What about previous to that? And you just go back as is. It was right here. And again, a little bit more of a broader sort of recovery before resumption, but nonetheless, the interruption was there. So my point being is all these things lining up just had me a little bit concerned. I'm not aggressive on this trade. I have a very, very small size. You do not want to throw all your beans in there, but just keep in mind that's a key level. A break of that level, we have some nice targets on the downside. The 100% measured move of the decline off the high gives you 109.85. Another level I'd shave a little bit more off of. And then obviously Jamie's target, 109.60. My target, 109.55. Won't split hairs, but you're basically looking at the swing lows. And again, slope. Same slope off the highs, a parallel off the low, converges right on that region. So the levels are very clear. You're still bearish sub 111.08 in the meantime, you need to break 110.15 as sort of the validation for resumption, 109.86 and 109.55 subsequent downside targets. Any questions on dollar yen, sort of the working mechanics behind anything that we just discussed here? Again, the broader picture looks lower. And to be quite frank with you, if we get into 111 and it gets rejected and momentum rejects 60 on an intraday basis, that's a tell as well. Such a scenario, you'd want to still continue the resumption of that downside trade. You don't want to get too constructive on this. Like we said, until that analog basically calls the end of this week when we should be looking for that turn. Or a little bit of a recovery, let's call it. Going once, going twice. Here's a 60-minute on dollar yen. Yeah, watch that range. Watch that near-term range. Big level here of that Fibonacci consideration. Okay, next up on tap. Spent a little time on that, but I think it was worth it. Number 2 is Kiwi, or number 3 rather. Exhaustion. Are we at exhaustion? What's going on in Kiwi? So didn't have enough conviction to take a position on this, but I did want to highlight the threat of what exactly is going on here. I've been kind of scratching my head with this thing because, it's not the straight ripperoo that we're seeing in some of the other currency pairs. You're not seeing that 7-day consecutive rally that we saw or in the dollar versus the yen. You're not seeing, or vice versa. In the yen versus the dollar, but you're not seeing that sort of straight up trade. The thing that continues to bother me is that we're still an overbought on the daily charts. Looking at Kiwi dollar on the weekly, here's what matters. Okay, here's what matters. 72.60 basically into like 72.80. You're looking at the long-term 200-week moving average, and you're looking at a basic 618 retracement of the entire 2017 range. So for me, I can't get comfortable trying to fight this, but the weekly close above this confluence region is what would keep it going. Let me say that. Now, on a weekly standpoint, again, you have seen a pretty decent stretch. Let me bring that indicator back from the weekly standpoint. Okay, so you're basically working on your 6th week of consecutive straight advances. You've seen one additional week here. We had a 7-week consecutive advance. That was interrupted by just 1 week before we resumed. Previous to that was right here, and that called basically the yearly opening range highs before the pullback. So you're seeing on a weekly basis that we're getting kind of stretched. Resistance confluence right there at 72.60, 72.80. For me, the close on the week is really, it's going to be the tell. If you close at that level or below, I'd look for a near-term pullback in Kiwi. But on the immediate approach, the reversal close candle from the September advance and rally. It was a decent resistance right there at 73, just above the 73 figure. Intraday, you have basic slope. Okay, basic slope support. Take a parallel. You had a couple of touch points here, touch point here. That called it exactly. If you take it straight from the highs, you have a little bit more room if we do spike higher near 73.75. But this is what looked very precarious. You had divergence in momentum, albeit a very weak signal, because both of those reference points are above 30. So that's not a strong divergence signal, but it's divergence nonetheless. Tack on a quick support trigger here. 1 point, 2 point, 3 point touch. There's the break. I still think that it has the risk for that drop near at least slope support, and I'd still be looking at 72.20 basically. So I'm tracking it. As a disclaimer, I don't have any, anything on this myself open at the moment, but the game plan for me is if we break sub 72.20, you'd start to look for a little bit more of a broader decline. Now, that decline should really be limited by this former slope resistance. So that would take you back in the range of like 71.20 into the 71 handle tops, on the pullback. But I would need to see at least a break of that slope support to get comfortable with that. The evidence is just not quite as compelling as it was on dollar yen, in my opinion. So from last night's update, no change to any of those levels. We simply broken below that 72.60 level. We recovered back above. Remember, 72.20 is really the level that would be the near-term bullish inval. So, again, it's not appealing to me from where we are right now, because we're right slap in the middle of the weekly opening range. But put a gun to my head, if this thing starts to drift back towards the high, I would be looking for exhaustion again. Quick take here on Kiwi dollar. Any questions on New Zealand dollar? Pooja says Euro Aussie at support here, 50% retrace. I have some slope. Consider long against London low. Euro Aus. Okay, let me add that to the list. Pooja, we'll take a look. Okay, last but not least from last night's update was crude. And this is something you guys know we've been following like a hawk. Here's the weekly implications of why crude prices, we've been calling for the 64.78 level to be a big level. So, let me show you the real chart, I guess, here on the weekly. So you have the 100% extension from the ascent, okay, off the lows from 2016, okay, boom, boom, boom. The 100% extension comes right here at 64.78. That level converges dead on with the median line for the slope we've been following since last year's low. Here's the 2016 low, 2017 highs, initial opening range highs, 2017 lows. You can see that slope's been offering some pretty decent moves. The 50 line resistance, break, saw it support. Here we are at resistance. So inherently, price is at resistance. Now, again, weekly momentum is an overbought condition, so you don't want to get conviction on this trade. You're still, this is when the market has still juice in it. That being said, resistance is resistance. So you start to look for near-term price to give you the tell ahead of that weekly close. That's where we drill into the daily. Daily chart highlighted not only that same 100% extension, not only that same median line that we've been following for years now, but also basic slope resistance. Here's slope support, one touch, two touch. You take a parallel to the highs, and lo and behold, converges on that same region. Add to that, you've been getting a string of divergent signals ever since the high that we made back on the 3rd of the year. Every subsequent high in price has failed to register a new high in the oscillator, and that's exactly what you're looking for when you're looking for divergence, is that the momentum signature is not reflecting an extreme in price meaning a new high or a new low. So, this thing was just screaming exhaustion all the way up, but there was really no reason to get bearish on it. The reaction that we got here, in my opinion, and again, the 70 break in momentum clears you of that, avails you of that concern that we're still going to run higher on just the momentum profile. And then on the recovery, 70 hold, 70 hold, 70 hold. That's even more so a conviction momentum profile reversal. So the pullback, it's coming into at least the initial support target was that 63.23. Recall that was the measured objective target, again, for this triangle breakout. So on the way up, that was sort of the region that we were looking to target. We've since broken it and offered support there on 2 separate occasions. So that's still going to be the level to break. 2015 high, for me, would be a near-term bullish inval. And in that event, in such a scenario, you would think to see a larger correction down to 61, maybe even 60 before resumption of the broader uptrend in crude. Right? I don't think anyone's going to argue this is an uptrend, but we are simply at uptrend resistance. Expect a pullback here in crude. Questions, comments, concerns? 64.78, still the key resistance level that you really need to respect here for oil prices. Okay. By the way, broader bullish invalidation for the broader trend, or I guess I should say the near term, medium term uptrend that we've been looking at since basically the lows in June, is 60. A break below 60 would change the overall technical picture. Not only that, because of the Fibonacci confluence that we reflected on, obviously that was a big target last year once we broke the yearly opening range highs. And we sat a good 4 days there before, obviously, the open of the year charged the break. It's a long-term 38.2 retracement from the decline off the highs in 2011. Again, it's a 618 extension from the broader ascent of the 2016 and 2017 lows. But also you have basic slope support. And more importantly, the yearly open converges all in this region, 59.94 into 60. That is the only thing that would fundamentally change the technical picture back to the downside for the medium-term outlook in crude. That being said, like I said, we're at uptrend resistance. Break higher, target 67.14 rather, on the upside. Okay, so that is crude inventories, number 4. Let's start jumping some of the dollar crosses, and then I'll take some of these requests you guys have on Euro Aussie for Pooja, Euro Yen, I think was for Tom. So we'll take a look at both of those. But first up is first, and that's Euro Dollar. We highlighted Euro Dollar earlier in the week on the intraday charts, basically calling for near-term resistance. Here's the couple of reasons I was looking for resistance here. So the 2008 swing lows come in just higher. You can see that on the weekly chart. And basically, we're flirting with a break of this median line for the broader structure we've been following off the 2016 lows. So the emphasis, as we open this week, is on a weekly close above this. Price has obviously broken through, but we need a weekly close above this to validate the breach of the upslope. And again, that would fuel an accelerated move, maybe even as high as 25.98. But first things first, that's sort of the precarious situation that Euro opened the week at. Looking at this on the intraday, or excuse me, on the daily chart. Obviously, an objective break here of the monthly opening range looks for a late month high. Well, the 17th is not really that late in the month. But you'd get a little bit concerned if this thing were to reach into that 1618 extension. Here's what the intraday chart looked like to start the week. Again, too early to really rely on this pitchfork, but certainly the median line has been giving excellent guidance. The upper parallel, little messy, right? But nonetheless, the hold. Initial support that we said would be right here at the 50 line. Okay, we came into the 50 line, then we probed through the weekly opening range highs and pulled back again. Overnight trade. Here's what euro looks like now. Okay, we came right into that 50 line, kind of dribbled a little bit below, but here's the rally push again failing. Couldn't even get a 4-hour close up there, and we pulled right back. So right now, on its face, here's your weekly open. Weekly open support has been tested twice already. You have a clear-cut weekly opening range high. I'm still be working with 2296, basically the 23 handle, as the weekly opening range highs. Look for the break for near-term guidance. Really, the move sub 2167, I think, would give us a larger setback in euro. But that being said, you have to stay constructive above this region. That's my problem. That's my problem. So, the exhaustion play for me since the start of the week that we wrote about was this pullback. Again, the first level here did get hit, but we didn't get that full extension 2167. That's the only thing that would make me bearish. Even if this were to drop in 2167, I'd be looking for a reaction there. And if you get a decent momentum hold around 40 in the intraday charts, you get a decent trigger on the upside on a slope for a trigger, I think it's worth a shot trying to take a rebound off 2167. But as it stands right now, things look precarious. Today's close will be paramount. It's not going to be an outside day reversal, but it will certainly be an outside day if we're able to make it through those lows from yesterday. Right off of this slope support, you see that gray line there, a very precarious line. This comes off the highs from 2008, subsequent highs in 2011. We tagged it as perfect resistance in 2013 before moving higher in 14. But even on the move higher, price respected that pivot pretty nice. The break saw acceleration, really messy here, but resistance, break saw acceleration, support, and again, the break saw acceleration before resistance again. So I'm still, I've still left that median or that basic trend line there I've been following. And if you look at it now, well, basically we just pivoted off it yet again. So these long-term slopes, guys, can be pretty key, on sort of pinpointing where these exhaustion trades may in fact start to pan out. So I'd get concerned. I know Jamie's still looking for, a bigger move higher. So am I in the broader picture. On the near-term front, I do think a 2167 drop, is on order. I wouldn't be too surprised if we get that move. So immediate threshold, immediate risk, I think, is for, a little bit more of a dribble lower. Ultimately, I do want to get a long position on that. Questions? Obviously, for just the sake of the swing trades, ideal scenario is that this thing kind of drops back into this former parallel and holds. That would be preserving our stop, which is basically just under that at 2190. So, it's not all hope is lost. The weekly open is still right there. So very basic weekly opening range. If it breaks to the upside, I think you're on point for 2376 as just an initial topside objective. Questions, comments, concerns on euro? Let's stick with the euro crosses since we're on the euro. So I guess we'll go in order. Thomas was asking about euro yen first. So Thomas, you might have seen this chart yesterday. Here's what we were looking at. And again, the basic premise of the trade is that you're coming into some pretty critical levels and a confluence region. Just from the weekly standpoint, the 1618 extension of the advance off the lows Not the actual stretch low because they all different registered things on Brexit here, but the low that we made subsequent in July. Um, the 1618 extension is right there, 136.32. We talked about it for a while. Also, basic slope support, parallel was a perfect break and touch. Another parallel here, we talked about this is kind of creative, but you're getting that reflection or inflection in price also converged right at that region. So the weekly charts have been showing momentum divergence basically since mid 2017. Okay, every registered high on a weekly close basis really was unable to register anything near a new high in momentum. So this just goes to show you guys as a lesson how oh, did he last night? Okay, good. I feel better about that. Jamie canceled the Euro entry. I must have missed that. But look, what I want to say is this just goes to show you a clear cut illustration, let's call it, of how momentum can really stay in an exhaustion profile type of picture for a prolonged period. It's strong to recognize it, but as far as this prompting a move, you would have been trying to fade this all last year and all of Q2 and 3, all of Q3 and 4 rather, into the highs. So I just wanted to highlight that that divergence still exists even with the high we just put in, and we're opening the year basically right below a near-term resistance confluence. Okay, you have a decent pivot in price near term near 34.28, but 133 is near term key support. The median line of this formation also rests there. That's also now the monthly opening range lows. A break there, you'd risk a larger drop near 130.50. I don't know if we get that. The focus for me on any type of plays for euro yen is just within the confines of this range. Okay, Tom, that's the only thing that you'd be focused on right now is playing within 133, 136.30. That's it. We break the highs, there's really nothing to stop this thing from going right up into 141. So a note there on the larger picture here, Thomas, for euro yen. So if we look at this more on an intraday basis, let me see what the daily charts look like here. Okay, nothing to write home about. I can tell you that over the last 4 days, the focus has kind of been the yearly open. So you're looking at 135.15, and that near-term resistance confluence now 136.23, 136 basically, 135.97. What that is former swing lows from back here, which has been a decent pivot all throughout since that low that we made in 2014 on the early January year or calendar month. But also this year's now high day close gives you 136, basically 135.97. So you can see the last 3 days, that's basically been the high. So the immediate focus is on a break of this right here. Okay. I do think this one, again, is one of those ones that, looks like it could be an exhaustion trade. We like the broader yen strength. We like euro higher. So it kind of, for me, gives me a little bit more of a mixed signal here. I'm going to be completely honest, Thomas. I don't know how I would want to play this. If you look at it from the intraday standpoint, I mean, look at this. Even the momentum trigger that we were looking at broke. So I was under the assumption that we were going to see a larger drop here. We highlighted this slope parallel and the 100-day moving average, but we barely even grazed that before reversing higher. So, it's a clear monthly opening range. For me, it's not really a compelling picture for a near-term play. Now, some basic slope does look like it's being tested right now. So, on a break below 135.20, let's call it, you might be looking for a little bit more of a pullback play in euro yen. But it's just too jackknife, Thomas. It's not, at least near term, it's not a trade I'm really comfortable with. Does that make sense? He says, okay, yes, thanks. Yeah, I wish I had more conviction for that one on you, Thomas. Like, if you put a gun to my head, it looks like you would see a consolidation function here, and I think this would break to the downside before it recovers higher, just based on the momentum profile. You're coming from overbought condition. That's where the high was registered. You made a dip. That dip took it into oversold, and then you're struggling here at 60 on the upside. So looking at this just from like a near-term momentum profile, for me, that would have me looking for possible break below that 135.20 for a larger correction. In which case, by the way, if you were to get that, you'd want to be working with this retracement. And that 618 would basically converge on slope into next week near 34.20 and change. Make sense? So that's euro yen. That was 4, 5, 6. Pooja wants to take a look at euro Aussie, and Eman wanted dollar Swiss. So we'll come back to dollar Swiss. Let me hit euro Aussie first, just because we're on the euro crosses. Here's number 7. So euro Aus, this thing, man, it's tough. The game for us, if you guys remember the euro Aussie update on the intraday charts, I can go scooping through it, looking for it real quick, but the basic premise for us was right here. We start to look for support. Actually, let me look for it, because it was actually pretty, I think the levels are unchanged on that. Right here. I know it wasn't too long ago. Here's what the euro Aussie trade looked like. In the focus range, the key critical support barrier, 152.30, excuse me, to 152.60, a 30 pip range that was, like, for me, huge. It was critical, it was paramount, and I wanted to see a daily close maintained above that. That's exactly what happened. And this is a perfect example of a trade where got stopped out if you would have tried to take the long on the rebound off that region. But once it recovered right back through and you saw that the daily close never materialized below that region, that's all the tell that you need. That's all the tell that you need, for at least for a near-term recovery. Now, it came into resistance and has since pulled off. Just so happens that that resistance test was basically also the monthly and yearly opening range highs. So it really puts the emphasis on the monthly opening range. You're sitting mid-range right now. So from here, Pooja, I don't necessarily have a play just objectively for our medium-term bias. We have to see a clear of this range to get conviction on where this thing would be heading, heading deeper into February, March trade. As it stands right now, you're coming off of resistance. This support barrier was the focus, right? And actually, even the previous update for euro yen, that it was all about getting price down into this region for the rebound. So looking at this back on the intraday charts, here's what it looked like. You came into that region, you saw a pretty nice response. We talked about the upswing looked great at first, but then we crashed lower. On that crash, divergence in momentum failed to register a new low in momentum despite the new low in price. And then the recovery in the daily close back above that key region, really was a scream. That's a long scream all day long. So the play was back into resistance, back into the monthly opening range highs, and that's what happened. Where do we go from here, Pooja? Well, the pullback, just wanted to snap the levels for you, is coming back into the confines of this near-term slope. So here's the pitchfork off the lows, slope support. You're being tested right now. Also, I'm seeing that you're talking about the 50% retrace. I have some support and slope. Right. So you have some support there in slope, and I'm guessing you're looking at this, where the 50% retrace would come just lower. So yeah, 53 handle, Pooja. Might be an area. Listen, for a rebound, I can't call this a reversal in euro Aus unless we break the monthly opening range highs, simply put. Now, I can tell you that I favor that scenario. If you had to put a gun to my head again, I would like euro yen to break to the upside, give us 154.80, maybe a test of 155.35. But that's what I want, doesn't matter. We have to stay objective. And yeah, I think coming into 53 near term might be a level of which you'd start to look for a little bit of a support bounce, but nothing too aggressive, Pooja, and nothing targeting outside the realm of the monthly opening range. Does that make sense? Once we clear the opening range for the month, awesome. Again, 155, 155.35, nice clean targets. Those are unchanged from last week. So again, if we just take a look, let me go back to the previous update, the most recent one here from the 8th. Those levels remain unchanged. But until we do, we're basically still looking for a break of the monthly opening range. Pooja says, okay, thanks. Right on, Pooja. Nice confluence region you found there. I like that 53 level. And by the way, we should clean this chart up a little bit at this point. Okay, that's going to be null and void. I'll drop that 38 too. So there you go. If you want to take a snapshot, guys, always remember you have that button at the top of your GoToWebinar screen. If you want to take a picture or a snapshot, excuse me, of any of the charts you see presented. Not much different from the previous update, but I think the new low registered, so the retracement got shifted, and then just the new retracement of the advance does highlight that 53 handle. Okay, so that is Euro Aussie number 7. I will take. We'll jump back into the dollar crosses. Let me hit Aussie sterling, and then we'll do Swissy here for a man. Here's what Aussie looks like. Since we're talking about Euro Aussie, we talked about Euro, right? Kind of a range-bound trade near resistance, so watch that trade. We talked about Aussie, still looking a little, or talk about Euro Aussie, still looking a little precarious here. Here's what Aussie dollar looks like, and it's the same type of trade. I'm kicking myself. This thing was at 79.99, and I was staring at it for a short entry. I just didn't have anywhere responsibly to put the high. The one idea I had, which would have panned out, obviously hindsight's 2020, but once this 4-hour closed and we opened up Asia, a stop against that high actually would have been a near-term scalp to the downside for sure. For sure. I'm kicking myself now, but the decline came right into the former swing lows. We saw the rebound again fizzle out. Momentum still giving you that weak, but nonetheless divergence in price, right? Price action. Remember, it's always about the close. Nothing matters on the wick. Higher high, failure to make a new high in price. So I've been looking at this support trigger, and it's kind of been like irking me. I want to see this thing give out. I want to see a little bit more of a break of those swing lows. Ultimately, I would love a drop into 78.86, 78.97, basically this 15 pip region just below the 79 handle. And I think we have to look for a more definitive inflection there, either a hold and a resumption for a move into 80.54, or my foreseen scenario is that you do get a little bit larger recovery before resumption higher. But I would not want to, in my humble opinion, again, be looking to issue new longs from these levels in Aussie. The targets are clear on the upside of what you'd be looking for if it does break, but issuing new longs from here, I think you're chasing. I'm more of the mindset of a near-term pullback. That said, remember, analog for the dollar calls for further losses into the close if we're just following the analog objectively. But we've already seen that the index did make a pretty decent reversal. So might come a little ahead of schedule as far as when we were looking for that rebound in the greenback. And certainly such a scenario would put Aussie on a little bit more of a defensive stance lower. Questions on Aussie dollar? I guess let me show you Aussie on the longer term charts here as well. Basic 786 retracement is where you're looking at that 79.97 level. But even on the weekly charts for Aussie, the ideal play would have been a stretch into 80.60, which is the high day close. That's not what's compelling to me. What's compelling to me on the weekly charts is that we've literally haven't seen a down week yet this year. Obviously, we're only 3 weeks in, but even since the low back in the early December trading year calendar, it's just been a straight rip higher. Let me bring up the consecutive bars here and see if we're actually making any impressive runs. Okay, last time we saw a stretch of this magnitude in this many consecutive days, you saw a little bit of a teeter here before a pull off, but this was in the confines of the downtrend. So you have to treat that differently. Within the confines of a downtrend, certainly, a magnitude rally of that degree, you wouldn't be too surprised to find a larger setback, a larger, more significant high technically. But this is within the confines of the uptrend that we've been in since 2016. Okay, so for the last 2 years, we've been making the assumption that Aussie remains constructive. You treat those kinds of 5-week, 6-week rallies a little bit differently. So let's go back even further. Okay, so you had here, this was in the confines of an uptrend. Saw a brief interruption just of a couple of days, right? A couple of days pullback before you made that next high. Literally a 4-day pullback, 5-day pullback, then you made a new high. And here, same thing. Decent pullback before you made a new high. And here, this had nearly a month pullback before we made a high. But you get the picture, right? We're coming to these levels where the exhaustion trade is paramount. It's not paramount, it's just giving you that indication. Bars are on the weekly. Yeah, so this consecutive bars indicator, this is we're looking at the weekly chart, Mark. I'm sorry, did I say daily? This is the weekly picture is what's concerning here for me on Aussie, and why I think, even though we were looking for the high week close at 80.60 on this stretch, near-term price suggests you're looking a little tired. And I wouldn't be surprised to see a little bit more of a interruption, let's call it, before resumption higher. Remember, the last couple of instances that we followed, these are the ones that I would pay more attention to, because these are the ones that were traded within the confines of the uptrend. This downtrend reversal, where on the rally of 7 weeks you kind of collapsed, that was on the tail end of a pretty significant multi-year downtrend. So treat those differently. But with that in mind, prices at the 786 retracement, we're still in overbought. We're still in overbought on a daily time frame, and that's again the concern about trying to fight such a strong uptrend. Intraday, however, interestingly enough, basic channel resistance looks like it was a nice tag here. So honestly, I wouldn't be too concerned to get another stab into this region. And if that does happen and that resistance holds, I would be looking to fade that. But I do want to see daily close maintained below the 80 handle today. And that would give us a little bit more support on the at least of a near-term pullback here in price. Make sense, guys? That's Aussie. Okay, that's number 8. Number 9, pound, and then we'll hit dollar Swiss. So here's what sterling looks like in price. The focus for the sterling trade update, which was here, was the fact that we were coming in some pretty critical levels. I think we've gone back too far. Here we go. So those critical levels were defined by not only Fibonacci, but slope. You had 100% extension, a 618 retracement, and a measured move for the near-term consolidation break that we were in, basically off the November swing lows that we made late in the calendar month. You saw that price continue to consolidate. Measured move of the breakout gave you 138.43. Or excuse me, 138.78. Like I said, just lower is that 618 at 138.43, and just lower from that, there's a simple 100% extension. This is off the ascent from the lows that we made back in November, and that gave you 138. So basically 138 to 138.78, this whole zone for me is a big deal. I can't short here, and I can't chase from here on the long side looking for those levels. So for me, I'm looking for a reaction off these levels to possibly offer entry for a pullback. Remember, we've been wildly bullish pound, guys, and I don't think anyone can take that away from both me and Jamie for a while now. And I think, it's not that we're bearish per se, but I do think that the near-term picture is starting to look a little tired. Okay, here's what the weekly charts look like. So, again, we're running, multiple week, 5-week advances. The last time we saw a 5-week advance was right here. You did see a near-term interruption. before resuming on a rebound, but this was a recoil or a correction within a downtrend. This is different, right? This is different. So treating that extreme as far as a run up in multiple weeks in price, you would treat that with a little bit more respect on being very nimble and looking for that pullback to offer re-entry for the long side, as opposed to this where the pullback, that rally should have been sold because you're in the downtrend. So keep in mind where we're coming from here. But basic slope resistance, the median line coming into focus here, just higher, 39.54. That's going to be a bigger target on the longer scale. It's the 50% retracement of the entire drop off the highs. But that's just to show you where the broader picture is in momentum. Also approaching 70. Price possibly still has some more room here before we turn over, but you're basically approaching that slope. So the weekly chart, that's kind of the outlook. Daily chart looks like this. That 618 retracement, again, of the Brexit decline. So that is simply the highs made in 2016 all the way to the lows of that calendar year, which encompasses all of 2017 trade. That 618 retracement comes in at 138.43. Again, like I said, the near-term 100% extension off the November lows, that comes in at 138.09. And again, that near-term consolidation break, that gives you a target just higher at 138.78. So I'm looking for exhaustion. We're getting the telltale signs of it, or the initial telltale signs. Again, bringing this into a line chart, you're seeing a higher high registered in price. That higher high was not registered in momentum. Both reference points above 30, so it's a weak signal. Nonetheless, we'll look for more divergent signals on a stab higher. I'm looking for exhaustion ahead of 38.78 in sterling. And that would be a simple fade near term against counter trend. Ultimately, a larger setback in pound would put us would offer a better long entry. But as it stands right now, the immediate advance is still at risk, in my humble opinion, below 38.78. And this goes well with the dollar analog, in fact. So if the dollar continues to slide or, doesn't necessarily break out before the end of the week, as the analog would suggest, that continued sort of slump in the dollar could see this thing drift towards that final measured objective target at 138.78. And again, I'll be looking for a reaction off one of these two levels to offer some entries on the short. Till then, be on the lookout for an objective break of the weekly opening range. Questions on sterling? Okay, E-Man, this one's for you. Here's dollar Swiss. Let's take a look at what this thing's doing. I don't have or haven't looked at this recently, so give me a sec. Okay, so, okay, so here's what the here's the weekly chart looks like for dollar Swiss. It's been pretty clean as far as just following this slope to the downside. The median line comes in just lower. A basic 786 retracement of the entire advance off last year's low comes in at 95.53. On the broader picture, that's where I'd be looking for a little bit more of the risk of a near-term rebound here. 95, let's call it 95.20 to 95.50. Okay, from the weekly charts. Daily. Again, some housekeeping here. Bear with me. And this looks like it broke already, right? Yeah. Okay, so this continues to highlight a near-term resistance zone at former support, or where we gauged former support. That gives you basically 69.60 to 69.80 as your near-term resistance region that you need to be mindful of. Okay, so the median line of a simple pitchfork off the high low high, or excuse me, the high low high, um, puts the median line right in that region as well. So again, 65, 96, 57 into 96.80. Okay, a little bit more of a divergent, stronger divergent signal into that low. Oh hell, look at that. The weekly opening range comes into that same level. So everywhere you look, 96.80 is resistance on this. I do think it's vulnerable. Um, Again, the analog for the dollar kind of has us on pause. I'm trying to get aggressive. I'm planning a dollar rebound, but yeah, I would be looking for a pullback here. I think to stretch back into 96.70, 96.80 again. That's just my humble opinion. Amen. Does that make sense? Does that offer some picture, some color to this? And one other measurement I would oh wow, I'm over on time. One other measurement I would just take a look at, Iman, is this, and see where the 100 comes in. Oh, we already took the 100 out. Again, coming up at 96.73. Watch 96.73, 96.80's resistance, bottom line, weekly open, a ton of Fibonacci considerations, um, slope, you name it. That's the level that would shift at least near-term focus for me, at least for a rebound towards 97.30, the upper parallel. She says, "Yep, thank you." Okay, guys. Look, ran out of time. I didn't get to go over. I don't know how many of you are actively trading this. And again, you guys seem pretty quiet about the Bitcoin trade, but I just wanted to highlight that this thing, the major move or the threat of what we talked about really played out already. The decline still has room, in my humble opinion, to 87.30, basically the 88 figure. That's going to be a measured move, a psychological barrier, and that would be a simple ABC equal two legs down correction into slope support. Remember, when you look at the Bitcoin trade specifically at this time, you do not want to focus on the arithmetic scale. You want to focus on log because you're dealing with such huge mass ranges here. But again, just the emphasis from a slope standpoint, from a key barrier standpoint, from a measured move to the consolidation, it all points to a move lower here towards 87.28. One other thing is, I know a lot of people have been looking at this consolidation, and if we do look at a measured consolidation type of play from here to here, the measured move there, whoops. Wow, that threatens a huge move. That can't be right. Oh, it's because we're in arithmetic scale. Yeah. Wow. big threat, basically. I still wouldn't, something's off with this. I wouldn't be looking for a necessarily move down to that. First things first, 87, 28, 88. Look for that being a big region of pivot. Then you sort of come into longer term moving averages, which in this thing haven't been touched essentially since back in September. But that would be, that would be on a move down into basically 7,000, 7,100. But everything you're looking at here is like textbook technicals, guys, whether it's the consolidation break, whether it's a simple and objective break of the monthly opening range. Here's your monthly open. You set a high, you set a low, you bounce, you break the low, accelerated move, see a washout, 87, 87, 30, 88 on tap. All right, guys, we'll have to wrap it up there. Thanks for everyone who attended. I will see you tomorrow. Stay tuned for the midweek strategy webinar with Jamie. Should be coming up in a little bit. And I'll see you guys tomorrow morning. Best of luck trading. Keep in mind, Beige Book released at 2 p.m. Eastern here in New York.